Investing in a single stock at just the right time could change your entire financial future. With the right mix of conditions, the stock can surge. Within a few short months, you can quadruple your investment. That's why I'm so excited about Nebius, a stock which could be on the precipice of a major share price rally. So, what makes this AI company so different from the others? And how much money might investors make if the company maintains its strong growth? In recent years, investors have been rushing towards AI companies, believing that this technology has the potential to revolutionize our future. Companies like Nvidia, Google, and Meta have seen their stock prices surge. But there was a problem. Accessing AI technology required a massive amount of investment, as companies had to spend millions on building new data centers and training costly AI models. But what if there was a way to access the benefits of AI at a fraction of the price? Nebius is an innovative company that uses cloud-based GPUs to provide the computing power needed to run AI programs for an affordable price. While competitors like Amazon AWS and CloudWeave also offer cloud computing, Nebius has a few big advantages. First, Nebius is a full-service provider. Other companies just offer cloud computing power, but Nebius will provide the software the developers need to run their AI tools. Also, unlike their competitors, which are designed for more general users, Nebius is built specifically for AI. It builds its own data centers, wiring the hardware specifically to perform complex processing tasks. But changing the hardware configuration isn't enough. They are also able to outmaneuver their competitors on price. Instead of a fixed monthly price, businesses only pay for tokens. By doing this, they are only paying for the computing power they need. This makes Nebius cheaper than its competitors, making them a viable option for small businesses and AI startups. While Nebius might have the tools it needs to become a financial juggernaut, things weren't always so easy. In fact, the owners were forced to completely reinvent the entire business model. The company's journey began in the 1990s, when founder Arkady Volozh started work on a search engine. Like many Russians, he was frustrated that Google struggled to understand the intricacies of the Russian language. By 1997, he was ready to launch his own search engine called Yandex. This site quickly surged in popularity, becoming Russia's most popular search engine. For a while, business was booming. In 2011, Yandex launched on the NASDAQ, raising over $1.3 billion. It was the largest public offer for a web-based company since Google in 2004. But in 2022, everything fell apart. Because of international sanctions placed against Russian companies after the invasion of Ukraine, Yandex was forced off the NASDAQ. But Arkady wasn't going to give up. He divested all the Russian assets. He renamed the company Nebius and was focused on providing the cloud computing tools that would be required in the coming AI boom. By 2024, Nebius was on the NASDAQ. Almost instantly, major corporations began to take notice. In December 2024, the tech behemoth Nvidia invested $700 million in Nebius, acquiring 0.5% of the company. In return, Nebius became a key partner with Nvidia. This allows them to get access to the latest hardware when building their data centers. But the big deals didn't stop there. Microsoft has signed a deal believed to be worth around $19.4 billion for Nebius to give them access to 100,000 NVIDIA chips until 2031. Meta has also signed a $3 billion deal. Thanks to their advanced computing power and competitive pricing, demand for Nebius services has surged. They started with a single data center in Finland. It now has 4 more, and another 5 data centers are planned for the coming years. Despite this rapid expansion, they still haven't been able to keep up with burgeoning customer demand, selling out of their computing power. While the cloud computing side of the business might be exploding, Nebius is looking to expand their AI influence even further by taking a large stake in a range of emerging companies. For example, they have a significant stake in Tolika, which was originally started by Yandex. This company provides training data for AI models. They also have full control over 1010, which gives employees the skills needed for a career in AI. In addition, Nebius has an 81% stake in Avride, which is developing autonomous vehicles. So how much do investors stand to gain from the rapid growth that Nebius has experienced? When the company was first launched in 2024, the revenue was $117.5 million. Just 2 years later, they are expected to earn between $3 to $3.4 billion in revenue in 2026. By 2030, the estimated earnings are between $7 to $30 billion. This remarkable growth can also be seen in its stock price. When Nebius launched on the Nasdaq in 2024, their shares were valued at around $20. Today, they are worth around $98. That's a 400% increase in price in just 2 years. For context, if you had invested $50,000, you would now have $250,000. The best part, though, is that many analysts believe that Nebius is just getting started. Some predictions believe that the company's shares could be worth around $150 by the end of the year. As the business continues to expand rapidly, the shares could be worth as much as $1,000 by 2030. If Nebius can achieve this ambitious goal, investors will make over 900% or 9 times their initial investment. As an example of what is possible, if you invested $20,000 today, you might have $180,000 in just 4 years. If these bold predictions pan out, those who invest in Nebius today stand to make a fortune. But what do you think? Is this stock destined to soar as demand for AI computing reaches new heights? Let us know in the comments.